Good morning. It's Thursday, June 20th, about 6 a.m. Central Time. Overnight, the precious metals are higher after Tuesday's relief rally, which spilled over to yesterday's also supportive rally. If you don't have a futures trading account, you couldn't participate in trading in the price action yesterday in the metals, in the energies, things like that. There was some good action out there. You just had to have a futures account in order to do it. Now, futures found support from Tuesday's softer than expected retail sales figures. Core retail sales month over month came in at negative 0.1% versus a forecast of 0.2%. The headline retail sales also missed expectations with 0.1% versus 0.3%. So if you watch Tuesday's Metals Minute, I highlighted, this is before the retail sales number, that gold would most likely reverse and we could see positive action on that weak retail sales number. Why? Simply put, that the consumer equates to about 2/3 of the economy. We get a weak retail sales number, which equates to a weak GDP number, which also puts 2 interest rate cuts back into the mix. So what am I watching in the markets here today? The bottoming process in platinum, silver, and copper in that order of strength. So pull up a chart, look at platinum. It's got that nice Nike swoosh going on. You got the silver market. It's got more of this downward channel that has a breakout to the upside. So call that, your bullish flag formation, and then your copper market, which has pulled back to the 50% retracement. You take the Feb lows, you take the May highs, you get out your little Fibonacci calculator, you go up like this, it'll show you the 50% line, and coincidentally, that's where we stopped at, and this is where we're starting to turn up at. So overnight, you got silver up 70 cents. I don't know what it was, Monday, Tuesday. I said that nobody would call up with silver under significant pressure and look to buy any options, buy any futures, use some kind of calculated risk strategy. But now with silver back over 30, we'll see what happens. I got a feeling a couple people are going to call here. So, despite the recent inflation slowdown, we really anticipate that we're in this new era with demand for raw commodities that triggers these temporary supply disruptions, and it potentially leads to, significant returns here in different tangible assets. So crude oil tends to be your best kind of broad inflation play. So it has all the right mix. We saw some geopolitical events that started to take off again. A lot of talk about Israel, ground assault with Lebanon, things like that. We saw crude oil futures rallying quite good on that news yesterday. Then it kind of pulled back at the end of the session. I suspect that was mostly profit taken in the end, where if that was just some news that just doesn't really grab too much more headlines or kind of fades off in the sunset, you start hearing about, peace treaties and things like that, or ceasefires and stuff. So you look at gold up about $5.80 right now. Gold is really your best play when it comes to stagflation. You want that higher inflation, you want that declining growth. And I think that's why gold took off here a couple days ago. I think silver is starting to play catch up, as reflected in the gold-silver ratio rolling back over to 77. Now, we really believe that industrial metals such as copper kind of provide that perfect mix against that new green era. And we believe that having a portfolio mix that is diversified with commodities can really help you benefit against a wide range of uncertainties. So I'm going to be looking at a lot of copper here. I'll start to look at the agricultural markets. If you look at ags that are under some pressure here today, some of the longer term forecasts are saying that potentially they get some rain in the mix on that 10 to 14 day. You get rain makes grain, and you want to see that rain around that July start of the month. So we'll see that kind of weakness. We might look forward at some positions here. So economic data today, it's going to be a little bit light, a little bit quiet. We got 2 Fed officials coming out. We got Thomas Barkin, we got Neil Kashkari, and we're going to want to keep an eye on the jobless claims. The expectations are for 235,000 jobs. Last week's 242,000 jobs. I was a little surprised because we did get that big uptick in the jobless claims number. The employment's starting to show some cracks in the economy, and if that consumer really gets stressed here, that could be what forces the hand and keeps and puts the 2 interest rate cuts back on the table, perhaps maybe even 3. Who knows? We got so pessimistic one way, maybe we snap back the other way. So tomorrow we'll have the flash services PMI and the flash PMI. So expect a lot of volatility here on that number. My suggestion to you, and this is just a suggestion that'll go out to our kind of clients here, if you don't have an account with us, please reach out, is that If you're up again substantially in something like silver, which is up 70 cents, 2.5% here today on a short-term trading basis, or platinum or things like that, why not trim a little ahead of this number? Because if you look at last month, on like May 23rd, when the flash services PMI came out way hotter than expected, gold was down $50. So I'm going to leave it at that. You got any questions? Give me a call, 312-858-7303. Glad to be back. I don't like these midweek holidays. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck, good trading.